Hey everyone, welcome to another episode of Wealth Visionaries. I'm your host, Litan Yahav, and we're continuing our series diving deep into the challenges of managing complex wealth with the nation's leading wealth professionals. And today I'm excited to introduce Steve Tresnan. Steve is a private wealth advisor at the Bonson Group's New York office. And he has more than 18 years in financial planning and alternative investments, specifically for high net worth clients. So I'm sure this is going to be a super awesome conversation. Thanks so much for joining us, Steve.
Absolutely. Thanks for having me. And I probably should give you a pointer on my last name of Tresnan, just like it, just like it sounds. But that's all good.
Sorry about that.
You get a pass here.
I should know because I have the weirdest name in the world. So like I should have, identified that. So sorry about that.
No worries at all.
So Steve, thank you for joining. Now I gave that one sentence background, but I'd love to give like a few minute intro. If you can just give us some background so our audience sort of knows who they're listening to.
Yeah. So like you said, almost 20 years in the business. I was fortunate with probably a different path up and coming than many advisors. Where I started my career actually at Ameriprise Financial back in the day. Back in 2006, so just pre-crisis. But the good thing about that was there was a heavy focus on financial planning, right? So, we wouldn't work with anyone without first having a financial plan. And that became just a real core competency of everything I've done for clients over the course of my career. So from there, ended up in 2009, flipping over to the independent side. So Hightower, which is at this point a pretty known national independent RIA, and but at that time was very much a startup. So that was pretty exciting as well. All hands on deck, figuring it out as we went along. But really, with that idea of having a place for advisors to land on the independent side and piecing together all the solutions they would need. And then through that, over the years, I'd gotten to know David Bonson and the Bonson Group, who joined Hightower in 2015 from Morgan Stanley. So again, we have this, I think, good perspective of sort of both sides, and meaning the big bank wirehouse side and the independent space, how all that operates, differences and similarities. So happy to even go down that path if it's useful. But from there, I've now been part of the Bonson Group for 5.5 years, and it's been fantastic.
So I have a question, and this might sound stupid because this is, again, me coming not from the financial industry and looking in from the outside. You just said 3 firm names when you said, right, there's the Bonson Group, there's Hightower, and there's Morgan Stanley. Are they, and then you said both Bonson is an independent advisor, but also Hightower. Now, can you help clarify that? Because I think the financial industry is going through a whole tectonic shift and roll-ups happening and aggregators and wirehouses and independents. Like, what do you see the difference in all those terms in the industry?
Yeah, so the big terms are going to be, I guess, sort of like banks or wirehouses on the, if you want to say that, more traditional side of the picture, right? And the big thing there is if I'm at a particular firm, then it's a pretty all-encompassing thing, right? So, I mean, I mentioned Morgan Stanley, so we could use them as an example. If I'm an advisor of Morgan Stanley, like everything else is provided by them and happening within them. If I'm a client of Morgan Stanley, like my money is there, right? So they're my custodian, they're my bucket, as well as they're my advisory firm, my bank. It's very all-encompassing, like I said. If you flip to the independent side, the term you're going to hear a lot is the registered investment advisor, which is an RIA. So that gets thrown around a lot. And that can be just all over the place, right? You could be your own sort of standalone RIA and your own sign and shingle, if you will. But you also have these RIA aggregators. And so like Hightower, for instance, was a partnership originally, and providing a place for advisors to land. So maybe I want to be a little more entrepreneurial, leave the sort of banking side behind and go to the independent space. If I'm going to do that, there may be things I don't want to take on, like compliance, legal, IT. I want to run my business. I want to have all the things I need to run that business. And so Hightowers and other firms like them, aggregators, are all a little bit different, but they would be the RIA backbone, the registered investment advisor, so sort of the legal entity, but also provide all these services so we don't have to figure all that out ourselves, right? So we can sort of plug in and say, great, you give us compliance and legal and IT. And we feel pretty good about those things. There may be other things we want to take on ourselves, benefits and such that we feel like we can do in-house, right? So there's no set way that it's done, and it can vary even at where we stand. It can vary team by team on what sort of services each one is using, etc.
So I'm starting to dive down
Does
this
that make
rabbit
sense?
hole.
Or
It does, but you opened up some other aspects that I want to touch on, because we've learned, again, short amount of time in the industry, but again, the confusion. And I want to touch on something you just mentioned, because it's really important. Because yes, an RIA is a definition by the SEC, right? Now, an RIA doesn't necessarily mean a wealth manager or a family office, right? If I'm an asset manager and I raise capital for private investments and I'm big enough, I need to be registered as an RIA as well. Now, that does not mean I'm a wealth manager. It just means the SEC requires me, because I'm fiduciary. I have a fiduciary responsibility for the funds that people have given me, to go through the process and hoops of becoming an RIA. But that does not mean I'm a wealth manager, right?
yeah. So you raise another good point, right? Which is, along with the RIA proposition definition comes the fiduciary obligation, right? That may or may not exist in other setups, but it is a de facto part of the RIA side of the picture. So not only are you independent, then there's the fiduciary obligation. Then you can go down the path of other common things people know about, certified financial planners, CFPs, and there are other designations, CFAs, CAIA, CAIA, which is an alternatives focused one. These all may have additional layers of fiduciary obligation and such, but the RIA structure itself comes with that. And then one other thing, just mentioning while we're on this topic, and then we can go wherever you'd like. A big difference is custody. So I talked about that bucket of where money is held. So like in our current setup, we're multi-custodial. We can hold money at various independent custodians. So some of the names people might hear in those spaces or in that space is Pershing, which is a subsidiary of Bank of New York, Fidelity, which is standalone, private, still family-owned company, and then Schwab, right? And Schwab is publicly traded. So they all have their nuances and subtleties, both from the advisor side and the client side, but all are really designed there to really be that bucket of money. We're not holding the assets on our balance sheet, so there's sort of separation of church and state, if you will. And I think that's a nice thing.
All right, yeah. So I appreciate. All right, so we went deep enough, I think, on the definitions, terminology for other companies. Now let's dive more into you guys specifically, like the Bonson Group, and then you in particular, Steve. So I did read online that the Bonson Group has multiple services that you guys provide, right? All the way from, I assume, some asset management all the way down to full family office type services, correct? And everything in between. Did I read that correctly, or do you want to give me some correction there?
Yeah, it's a broad offering. So at its core, again, back to that idea of financial planning. At our core, we are a financial planning firm, right? And all that really means is being able to look with a broad lens at our client financial situations across all the areas that make up your financial life, right? Things that are simple, like your cash flow and cash reserves, but things that then become more complicated, your investments, your tax planning, estate planning, etc. So retirement usually mixes in there. When you look at that whole broad picture, then you may come up with different and ideally better answers for, well, how should I actually invest, right? What sort of income or cash flow do I need to drive? What does our tax planning picture look like now, but also into the future? How does this affect our estate picture over time, right? So that's the whole idea is the planning is a framework and a process to help you get all of this, I think, more right. And then you bring in other resources as needed, right? As you're going through that process, you may need insurance review, you may need insurance coverage, right? So you need to pull in that sort of resource. You may need shallow or deeper resources on the tax side. Same is true on the estate side, right? So depending on how complex things get, then you can bring in these other resources. And that's where we may stray into what we call our family office services, where there's a deeper complexity and this additional higher touch need for those particular clients.
All right, we'll get there for a second. So let's go back to the beginning. So you guys offer a full set of solution services, starting with the core of the financial planning, which I assume, pulls also in estate planning, tax planning, and all that under the financial planning umbrella, correct?
It does with I would just say the caveat is we're not attorneys or anything, so we need estate attorneys to execute documents. We try to do heavy lifting on the estate strategy and planning around it.
Yeah, and I think that's what the interesting part, important part is the strategic aspect of your financial life. And then tactical aspects, or just need to be done. And I assume that's more commoditized, and the strategic part that's what you guys probably bring to the table. So when you talk with new prospects, by the way, do you guys do any marketing, like prospects wise? Is it all word of mouth referrals, or you guys also do some like marketing as well to reach more people?
Well, we're in a unique position where our founder is a sort of force of nature, David Bonson. So just thought leadership. We value what we call content as a service. So that is, for no fee, we are constantly putting content out to the world, daily, weekly, in various forms. But David himself, multiple TV appearances per week, podcasts, has written a number of books, and all of that over time, like, just starts to build a brand and gain traction. It's funny, if you talk to him, it wasn't actually intentional. It's just sort of how it has unfolded. It was more of like, hey, I want to put this message out, and eventually that became more of a thing, and people actually reaching out to us, right, as they followed him for a number of years and sort of build trust from a distance. So that's our main source of marketing. I mean, of course, we want to see our clients, and we do fun things in the various cities. We're in about 10 cities now. So, a client dinner in New York coming up here in the next month or two, that sort of thing around the country. But really, it's this idea of constant contact.
So he's the face, right? And then that also opens an issue sometimes, right? Because then everyone hears him and wants to meet with him. I assume want him. Is that an issue, or that's not like a non-issue?
It's really a non-issue, which, from where you sit, I totally understand why it would seem like it is an issue. But yeah, it's surprisingly not, I guess. And it's sort of strange, but maybe in some ways, he's held in such high regard. People don't come to the team expecting they would
Got
take
it.
his time
That
or
makes sense.
work directly with him, if that makes sense.
Yeah.
So yeah, not something you run into too often. I mean, we do try to bring him into the fold and introduce him where it makes sense
I love it.
to new clients or current clients.
So you get a new client or prospect. What's like the ideal client look like?
Ideal client. Well, I could say our wheelhouse more so is probably, like, if you look across our book of 1,000+ households or something like that, the core of that is somewhere, I'm going to say, that $5 to $20 million range of client. Complex enough that we can really add a lot of value. And that's not to say, I mean, we work with clients across the board, so that really ranges from, we can work with a client with nothing, maybe even in a more consultative way, if we think that relationship makes more sense long term. But it's going to be not only quantitative, but also qualitative. So we're interviewing the clients just like they're interviewing us. It has to be a good fit. It has to be people that we want to work with, and then we feel like we can help them. That's great. And then the natural output of that is they're all over the place in terms of the range. But just to paint the picture, the core client is probably in that $5 to $20 million range or so. Usually private families. We're looking more at the institutional side of things going forward, but a lot of entrepreneurs, things like that. Business owners, maybe they've had an event or just generated wealth through their business over time. Professionals, etc.
So I'm on the more sort of like do it yourself spectrum. And I know a lot of people around me that had an exit event, started to deploy capital. We think it's not that difficult. Obviously, then complexity arises and it becomes a whole total shit show. But how? I mean, and I'm sure when someone who's like more do it yourself, like writing checks to whatever real estate syndications and startups and hedge funds and just friends of friends and stuff like that, does that increase the level of complexity? Do you guys say to those types of people, listen, you can do whatever you want, we're going to be your sounding board, or no, I don't want to work with someone who is always going to give me this pushback and like they think they know better. Is there a spectrum there that you guys deal with or prefer not to work with or have experience working with?
Yeah, there is a spectrum. I like to think of it as we want to control enough of someone's wealth so that no matter what they do outside of us, if they're doing anything outside of us, but most of our clients, we we're working with their entire wealth picture. But they have that DIY bug, so to speak, and they want to do some things on their own. That's all fine because we can't offer everything to everyone, but we need to control enough so that they cannot blow themselves up.
When you say control, what do you mean?
Meaning manage directly enough of their wealth and situation such that we can drive what we feel to be certainties and the outcomes of what we're planning for, right? So if, for instance, a lot of times that is my lifestyle, combating inflation over time, living my retirement life, maybe it's gifting the kids, leaving a legacy, all that stuff. If a client comes and says, like, those are my objectives, then we need to manage enough of their picture. Granted, they have enough to manage and that aligns well to make that all work and feel good about it. Right. And then if they're taking, 100,000 here and whatever else here and doing these, hey, my buddy came with a real estate deal, great. Or, I really just want to throw some money at crypto or something like that. Great, because we're running this core of their wealth and doing it with our planning hats on, and we feel really good about, doesn't matter what happens with that other money, you can't blow this up, right? We can drive it. The alternative situation there is like, hey, we have a piece. We can only control this much. We can't control if you have another advisor, what they're doing, what sort of income they're driving, what their approach is, what their philosophy is, or what you're doing on your own with what would be more of the core of your wealth. That tends to not work so well.
Right. And that's something you hear across the board, right? Like if you're not showing your advisor the whole picture, how can they give you true advice? It's just like it's counter. You can't do that. I assume.
Yeah, I mean, you really can't.
Yeah. So when you look at sort of your client base, do you guys usually have like 100% wallet share, or is it share? And you have a certain slice of it, certain the other slice someone else, or certain other slice to do on their own.
Yeah. So I'm not going to lie and say like we have 100% of everyone's wallet share. I would say for most clients, we have 100% of their wallet share. And then it varies across the board, right? So, and it's not like a size thing or anything like that. You could have a $200 million client that has all their money with us. But you could also have a $5 million client. And again, all the math aligns, planning's good. But they have, they want to just like be doing a couple things on their side or having a trading account or whatever it is. All fine. So it's really across the board.
Right. And so, all right. So you have a client who says, all right, I want on board. And then goes through the process of whatever, signing all the documents, all that stuff, moving over. Do you have to move their accounts to you guys? Can you get access to their accounts and just manage it instead of a different advisor they already have?
It depends. So like for us, our preferred custodian is Fidelity.
Okay.
And that's for a variety of reasons. It makes our life just easier on a day-to-day basis. It's sort of the best solution we've found. So we'll often encourage them to move them to Fidelity. But if you come to us and you already have a Fidelity account, and we can often, not in all cases, often add ourselves right to the account, and then from there be able to take over management. Right, obviously with your signature and so
Right.
on.
No, for sure. So just because I'm a tech guy. What other sort of, so you have Fidelity as a custodian, what other sort of tech stack do you guys operate on?
Yeah, great question, because this was such a challenge. I talked about like the startup years. The industry wasn't really built for the setup that we have now. Multi-custodial, where do these things feed to? How do you make sense of them? How do you trade across them, et cetera, right? Whereas now it's come such a long way. So like in the tech side of things, you're going to need reporting, right? So you need, how do I make sense of my portfolio? And then what's my performance? People want to know that. So like some of the very common solutions and now the independent space are Black Diamond and also Tamarack. So I was on one, now we're on Tamarack with our current team. And so what that does is gets daily feeds from the custodians, right? Again, I mentioned some of the names, but your bucket, they're feeding overnight. They're all tied in and coordinated on the back end. And that information shows up on a daily basis into these reporting systems. And from there, there's a lot of control, bells, whistles, et cetera, on like how you want to see that sliced and diced and what performance looks like over time, how your reports look, customization there, branding, so on and so forth, right? So that's part of it. And then trading may or may not tie directly into that reporting system. It's much easier if it is. So if your same reporting tech is also providing a trading platform, so everything talks very cleanly, that's nice. And they have those solutions now. Again, That's like the past decade to 15 years. These have really come along and gotten better. And then the other tech is on the planning side, right? So there are other software providers, and people probably have heard of a bunch of them. There are the Naviplans and MoneyGuide Pro. We use eMoney, which again we regard as the best all around. So you can have account data feeding directly into that platform, right? So again, daily refreshed assets. You can feed in outside accounts. So also my checking can be in there, credit cards, mortgage, all that stuff, because that's where you're really trying to make sense of a living, breathing balance sheet, right? So you have those feeds. You also have more static items, maybe my home value, maybe I own a property somewhere else, etc. Balance sheet, and then the inflows and outflows, right? So then you're really trying to model the cash flows, what's coming in, what's going out. How does this project out over time if we make some return assumptions, income assumptions, tax assumptions, all of that stuff. And so that's the bulk of the tech.
That's before privates. Like, do you also have like a Canoe or an Arch or like something like that pulls in, analyzes like, K1s and documents, or like a Vanilla or Orca for estate planning and stuff like that? Or is that all in one?
All in the mix.
That's insane. Every time I talk with a wealth man, and you also have a CRM probably. I don't know which one of you guys use. It's like,
yeah, we're on Salesforce, and that actually so there's the CRM part, but then it also for us in particular drives a lot of the whole backend platform. So Salesforce is also a tech platform upon which you can build, and so we have more of an internal platform that's all constructed on there as well as it being our CRM.
How about AI? You guys level in all that mix. So AI, in my mind, it has two aspects to it, right? There's the AI, what maybe the negative or not so negative, which is now every household or every wealth owner thinks, well, let me just ask, ChatGPT what I should do, and then double check what you're telling me, and then it's like doctors complaining about everyone now is a doctor asking ChatGPT what they should take, and now that creates their life much more difficult. And I assume the same side happens, in the wealth management space where, hey, I know better. I mean, let's start to. And then there's the other side of your side, which is how do you leverage AI in your tech stack to just be more productive, serve more clients? Like, how do you guys look at those two aspects of AI?
Yeah, so on the former, I don't know how much clients are using that. I mean, I would say also our clients, we have younger and older clients, but let's say a fair amount of them are boomers and older, right?
Dude, listen, all right, hold on. My parents, my wife's parents, they suddenly depend on ChatGPT for everything. Like, where are we going to
Really?
eat tonight? Let's ask ChatGPT. Let's go on a trip. Let's ask, like, I'm blown away. Like, it's like too much dependent
That's
on it.
amazing. Well,
Yeah.
I think a lot of our clients that, in my experience so far, or at least aren't bouncing like our ideas off Chat GPT. But that's a great question and a good thing to watch out for. I know people using it to like draft their fantasy football teams and stuff, and probably on the DIY side, yeah, maybe they're looking for ideas that way. I haven't run into it too much, but
Okay.
that's not to say it's not the case. So I think it's a great idea. On the other side, so far it's been limited, right? So I even did a blog series on trying to think through like how I could incorporate more AI into what we do on a day-to-day basis. And what it comes down to sort of is like AI is not that intelligent, if that's fair, right? Like I know it can find you a lot of information and such, but it really can't like look at a client email, go through their situation, and conjure up some sort of reasonable response or the way that we would need to look at it, right? That would be awesome. Maybe in the future, like we just talked about all these tech things, like that, literally a lot of what we need to do in terms of providing some guidance to clients is like, okay, here's your question. Well, then we need to be looking at their financial plan. We need to be looking at the portfolio. We need to tie all these probably things in our CRM, tie all of that stuff together, and then, come back with an answer or perspective. And it's just not there yet, or else we're using it poorly.
Yeah. Interesting. That's a whole world we're starting to dive into from the tech side. So, all right. Now, that's really interesting perspective on tech in general. So you have clients, about 1,000 plus households. How many advisors are on your team?
20 plus, let's call it 25,
All right,
some
so you
round
guys have
numbers.
pretty good ratio advisor to family. Usually it's like 1 to 100. You guys have like 1 to 50 basically.
It's very intentional that we are capping advisors about 80 households.
Okay.
And like I'm striving to have less than 80 households, and I do. But that's really something we've done internally, and you can't just say it. You have to actually dedicate resources to be able to do it. So like advisor hiring and cultivating and mentoring is a constant thing. And we also want to be very resource heavy in what we provide to our clients. So for instance, our team is north of 90 people, right? But only 25 of them are advisors. And so that ratio
That's
is very
insane.
healthy.
Listen, that's crazy.
Yeah.
That again, you need 90 something people to serve clients when the data is all in these technology. And all right, wow.
Well, yeah, it depends on how well you want to serve them, right? So you can do it differently, but if you really have the operational capacity, that's all the day-to-day money movements, account openings, so on and so forth. Your risk management, insurance. We run an in-house investment team. So
Okay.
with that, you have analysts, you have traders, you have
Got it.
manager analysis, investment committee. Then we have a full-time content team, full-time graphic designer, people that are responsible for helping to edit. Some of the things that you're going to be doing with this, right? Edit. We have compliance process for content getting through that, getting disseminated to the world, branding, and a big planning department, a tax team, family office. So you start piecing all that together, and then you actually have some administration and such, finance, so on and so
That makes a
forth.
lot of sense.
Like it adds up, right?
Yeah. Steve, this is so interesting. And I know we're coming at time here. There's a lot of questions I wanted to ask, but we didn't get to. Maybe we'll have a follow-up recording.
Yeah,
Is there
sorry.
anything sort of you want to share, just like before we sort of sign off here with the audience, things that we, top of mind that people should be aware of? And obviously we'll share all the information to reach out to you, but like other than that.
Yeah, I think what's near and dear to our hearts. Like we look at the world a little bit differently, so we don't necessarily own the market, right? A big premise on which we're built is a core of dividend growth investing. And so I'd encourage people just to look at that and learn more about it. Like David, the reason it is like our core philosophy, David has done a lot of research on it and also written a book on it. But if you look at it, I think mathematically it stands up as the better way to invest over time and without, really taking you down a rabbit hole or anything like that. It's an interesting thing, yet it sort of flies under the radar. Like maybe because it can be boring because you need mature companies that can focus on dividends and then also growing those dividends over time. That's what dividend growth is, right? So I'm getting, whether I reinvest it or I put it in my pocket, I'm getting a sort of paycheck from my portfolio, but it's also one that grows over time. So when you think from a planning standpoint, what's a great tool? Well, what about something that grows in asset value over time, that also provides me an income that grows and outpaces inflation over time? It's a really good tool, sort of akin to real estate in many senses, right? I own a building, I can raise rent, I collect that over time. This
Yeah.
is more a public market
That's
way.
passive cash flow is like the way, right? And there's ways in the public markets to generate it and ways in the private markets to generate it, right? And I think I love that
Yeah,
approach.
and we love both, right? So very love dividend growth, love private markets, but we really invest across the spectrum based on what makes the most sense for clients.
Steve, this is awesome. Thank you so much. I apologize we didn't get to everything, and maybe we'll have a follow up on this. And I do apologize again for getting your last name wrong. So my bad on that.
No problem.
Thank you so much for joining us. And if anyone wants to reach out to Steve, we're going to share his contact information and the Bonson Group as well in the show notes below. As usual, thank you so much for joining us, and stay tuned for next episodes with really interesting people in the wealth management space. Have a great week and invest smartly. Thanks a lot.
Thanks again.